This is Earnings Preview, a look at companies reporting during the week, along with companies which may have positive or negative earnings surprises. This earnings preview for the week of March 23rd through the 27th. I can't believe it's the end of the month already. Charles Roteblatt, our senior market analyst, here with me. Spring has already sprung. Today, officially the first full day of spring, according to the calendar, the 20th of March. We're taping this on. But you're not really overjoyful about earnings for first quarter. You say pretty much a non-event.
Yeah, I don't think anybody really expects good numbers to come out for the first quarter. And we are looking at a decline year over year, regardless of how you look at it. If you look at the index level or you look at a median company or per company basis, we're in a recession. The numbers are going to stink. The big question really on everybody's minds is, when do we get out? When do we see a recovery? So guidance will have some role on it, what people are seeing, whether or not companies are seeing their business trends trying to stabilize as opposed to worsen. So that aspect will get some attention and people will want to see what companies say. But the actual numbers themselves, it's been a known fact that first quarter earnings are going to stink and stink pretty badly.
So the focus is going to be more on guidance?
I think on guidance, and like I said, everyone's trying to figure out when will we start seeing the recovery, and right now that's anybody's guess. So guidance will get a lot of attention. It is worth noting, since we're technically not into first quarter earnings season yet, earnings seasons always officially start with Alcoa reporting.
Right.
We won't have to really start seeing it report till early April, and really won't see the big batch of reports until the second half of April.
58 companies confirmed on the calendar to report this week. Among them, 10 S&P 500 members in the group. Any standouts to the positive side?
You know, one thing that's interesting is Best Buy, and the reason I'm bringing this up is not only because earnings estimates have been revised up recently, but it's really kind of playing two sides of the fence. One, you have the declining economy. People are worried about their spending. Obviously, if they can make a washer and dryer last longer, they will. Certainly not in a rush to buy the new iPods or necessarily new phones. So that stuff hurts their business. On the other hand, one of their biggest competitors, Circuit City, went out of business, so it should be interesting to see what kind of market share they gained and how much that helped their profits.
Yeah, all the more, because I was just in one not long ago checking on some prices and on electronics, and to my surprise, they haven't really come down all that far. There's some select sales on clearance items, but the Circuit City story for them may just kind of underscore for them that now they're the only game in town.
Well, I also think it's a question of margins, and there's not that much room, particularly in a lot of items they sell. Certainly some items, when you look, I'll again bring up the iPods, Apple pretty much sets the prices, but when you look at a lot of other items, even some of your bigger ticket items, not a lot of margins. Certainly your smaller screen TVs, some very minimal margins. Computers, again, not high margin products. So there really isn't a lot of wiggle room for them to cut prices and stay profitable.
All right, also on the docket, some housing data in the first half of the week, including existing home sales on Monday and new home sales on Wednesday. And probably not a lot of good news there, huh?
Not at all. And you also have Lennar reporting. One thing that will be interesting about the home builders this reporting quarter is that they are facing easy year-over-year comparisons. So although a lot of them will report losses for this current quarter, we will see a lot of these companies reporting impressive year-over-year gains simply because they're going from a very large loss to smaller loss. But still a loss nonetheless. Certainly with unemployment rising, housing's not going to improve. Although we've been hearing reports about mortgages falling as low as 4 3/4. Today, Bankrate.com was saying about 5% this morning. That might have dropped. But it's important to realize that a lot of people, unless they really have gold standard credit, they're not going to be able to take advantage of these new lower rates that the statement by the Fed earlier this week has caused.
And the market coming off of an overbought condition for the week, so a pullback doesn't surprise you.
It doesn't. As we record this on Friday, March 23rd, we are seeing the markets pull back. If you look at stochastics, the market really was in overbought territory according to that. That's a technical indicator. If you look at a trend line, the 50-day moving average, every time the S&P 500 has hit that, it's actually pulled back since last summer. Again, it hit the 50-day moving average this week. So on a technical basis, there's an expectation that the stocks would pull back. I should note that as we we record this, it is a quadruple witching day, so that's adding to normal than usual, I should say higher than normal volatility today.
Right. So anything can happen at the closing bell.
Absolutely.
Or in the minutes leading right up to it. Well, Charles outlined some companies that could surprise to the upside, as well as at least one that could surprise to the downside. You'll want to get over to Zacks.com and check out the text version of his earnings preview to get more detail on that. With Charles Rotblatt, I'm Terry Ruffalo.